Hello. My name is Brian. I'm from South Korea. I run a CeFi platform called Sandbank. It's based in South Korea, and we're trying to expand our business to overseas starting from early next year. Today, I'm going to present you about the reason why we have to invest in Bitcoin now. Thank you. So, Bitcoin is correlated to the stock market. This is the phrase that I often hear these days whenever the price fluctuates. Has anybody, is anybody investing in Bitcoin right now? Anybody holding Bitcoin in your own wallet? Quite many. Nice. Yeah, I'm investing in Bitcoin too. I'm DCAing, which is dollar cost average. I purchase Bitcoin on a regular basis whenever I receive salary from my company. Look at this chart. This chart represents what happened to the price of Bitcoin when the IT conglomerate's first quarter earnings result came out this April. So after Meta, the parent company of Facebook, their first quarter earnings result came out on April, the BTC price have plummeted, right? But a few hours later, when Amazon's first quarter earning result came out, they beat the expectations and BTC price went back up. So we can see how the stock market of the US and the Bitcoin price are strongly correlated. Next, please. So the correlation was staying at as low as 2% before November last year. Last year, November, the Bitcoin price was above $68,000, right? All-time high. But what happened from April this year? The correlation increased significantly and came above 50 or 60%. Right now, the correlation level is about 50%, which is still high, but came down from the top because of the FTX incident happened. You know, FTX incident was only focused on the crypto market, not really impacting the traditional finance. So the correlation has decreased, but it's still high level compared to what was last year. Okay, why are they highly correlated now? Everybody says, whenever I ask this question, people usually answer in a way, institutional investors came into the market. Yes, institutions did indeed come into the crypto market, and they are purchasing Bitcoin or Ethereum or other major cryptocurrencies. But is that the only reason? I don't think so. So you can compare this situation to the case I wrote down here. The ice cream sales and the case of sunburn, they can increase together, but one does not impact the other or explain the other, right? Ice cream sale can increase without no reason. And sunburn, the case of sunburn can also increase without what's happening to the ice cream sales situation. So if you want to really understand what correlation means, you have to understand correlation represents the direction rather than the size of the price movement. So Bitcoin and the US stock market are moving together in the same direction. That means their correlation is high. So let's find out what changed. So the main reason why they are correlated now is because the Fed is increasing interest rate so rapidly. If you look at this chart, on the right-hand side, you know how the degree of the line is so steep? So US Fed is increasing the interest rate to 3.75% over 9 months of period of time. So they are increasing the interest rate very rapidly, very aggressively. compared to any other periods in the past, you can see how aggressive they are right now, right? So because this interest rate hike, the market sentiment is so down, regardless of its stock market, real estate market, cryptocurrency market, it doesn't matter. Everybody is staying away from the risk asset. That's why stock market and the Bitcoin price are moving together, moving in the same direction. Okay, the next slide. Okay, why is the Fed increasing the interest rate? Because of the inflation, right? We hear this word so much from the news these days. Whenever the CPI result comes out, everybody says it's broken the record, all-time high, something like that. So the CPI index in the US is staying at 8 or 9% level year over year, which means the price of services and goods in the US is increasing by 8 or 9% every month compared to the same period last year. So pretty severe, right? Price of goods are increasing. Next slide. Okay, why is the inflation happening? There are 4 main reasons. The first one is the global supply chain restraint because of COVID. COVID happened 3 years ago, and because of that, the global supply chain is so restrained. Second is the food and energy price hike because of the Russia-Ukraine war. The war is still going on, right? We never know when it's going to be ended. The third is the demand is coming back because of the holiday season is coming back, and the COVID is finished in some major countries, right? So people are going out there and spending more money compared to last year. The last reason, which is the most important, is the rapid increase of money supply. Every central bank in major countries is printing money out of thin air. And that's the most important reason why this kind of severe inflation is happening all over the globe. Okay, let's see this chart. If you look at this chart, this is the US Federal Reserve Bank's reaction after 2008, when the US housing market collapsed. They started printing money from this point, and look how steeply they've increased the money supply starting from 2020, when the COVID outbreak happened. And this is not just the US, but the other nations. So from the US, about $8.9 trillion have been printed after 2008. Europe, Japan, and China pretty much followed the same path. Next slide, please. So the total assets held by central banks of these major nations is over $30 trillion now. It was like below $5 trillion in 2007. After 20 years, we are now at $30 trillion level. So you can see how rapidly the total assets held by these major central banks have become so enormous. Next slide, please. So how did this impact the stock market? If you look at this chart, the red line is S&P 500 of the US. It almost moved with the same trend and direction with the total asset of the major central banks graph that you just see, right? So stock market has been addicted to this kind of money printing for the last decade. You've heard the word Greenspan put? It means central bank is always there whenever there's a damage or shock in the stock market. The last Federal Reserve Bank's chairman, Greenspan, has used this word for the first time. And we know what happened in 2008, right? The quantitative easing. This word was first used by then central bank chairman Bernanke. So the stock market was addicted to these two policies made by central banks, Fed put and Fed easing, for for the last decade. Next slide. The result of this kind of manipulation to the market is quite severe these days. This chart represents the inverted yield curve between 10-year US government bonds with 10 years maturity and 2 years maturity. If I lend you out my money, if you borrow money from me for 2 years, then you should be paid in a less amount of interest payment than the 10-year maturity bonds, right? If I lend you money for a longer time, then I have to receive a higher amount of interest payment because I lend you the money for the longer period, right? That's the normal situation. But now the US bond market is inverted, which means their economy is in a kind of problem. And usually, when this kind of problem happens, financial analysts say the possible recession will be coming in 2 years. The problem is Fed is increasing interest rate too rapidly. Fed is too tight. Banks borrow money in a short term and lend out the money in a longer term, right? And the margin between the two is the bank's revenue. And when the interest rate goes up too rapidly, they have to stop borrowing. The businesses in the economies have to stop borrowing from the banks because the interest payment to the bank is so burdensome, right? And what happened to the outstanding loans? The default rate goes up because the businesses suddenly cannot pay out this interest payment to the bank. Lastly, to minimize the impact from the shrinking margin, banks have to retrieve the outstanding loans, which means they don't lend out the money anymore. So the money supply in the market shrinks down, which disincentivizes the economic activity of these businesses. Next slide. And the US federal debt against GDP is record high level, which is 127%. So I showed this previous slide and this slide because I want to claim that Fed cannot increase the interest rate forever. They have to stop at some point because it's so burdensome for them to do so. So they have too much debt in the system. They cannot just raise rates forever. Next slide. So if they continue to debase the currency, which means they will still print more money and flow it into the market, then what happens? What happens to us? The price of everything will go up, especially those goods that are scarce. So more expensive goods become more expensive, and less expensive goods, like normal goods that you can substitute with other things, will stay that way. Like hospital services, college tuition, childcare, nursery, school fee, those things you cannot really substitute with other things, right? It's a necessity to live. But the other things, new cars, furnitures, wireless telephone services, these things you can substitute with other things, right? So the price of those things stay the same level for the last 20 years. Hospital services, college tuitions, it has dramatically increased for the last 20 years. So the scarce things, the price of scarce things will continue to go up, right? Next slide. Look at what happened to the European luxury goods. You see Louis Vuitton, what else? Luxury goods, watches, and Chanel. The stock price of those companies have dramatically gone up. Like, you can even compare with emerging market Asia tech stocks and the US growth stocks. What's in the US growth stocks? Like tech companies that you use daily in your app, in your mobile. Or emerging market Asian growth stock is something like Alibaba in China, you know how rapidly their stock prices have gone up, right? European luxury goods, their stock prices have gone up so rapidly as well for the last 10 years. Next slide. So inflation is it's not just CPI, but it's a factor, which means it can exist in the form of so many things. So if you look at this simple formula, the present value of a stock is calculated in this way. The future cash flow divided by the discount rate. Discount rate is the interest rate, right? The interest rate is manipulated by the central government or central bank. So the present value of a company can also go up, like in a really strange manner. Next slide. So if governments manipulate the interest rate by quantitative easing, then they are manipulating the cost of capital and the price signals for everything. So you cannot really trust the price of stock, bonds, real estate anymore because it's manipulated by the central government. So what we need is something that can generate the real value. To supply a peg of value, real work needs to be performed, right, for the economic growth. And what's the asset that's doing it? Next slide. Let's look at this chart. The major countries' stock market have gone up so rapidly after the COVID, right? Indian market have gone up 200%, US market 178%. Next chart. But what if we see this same chart using the US dollar instead of the local currency? The US stays the same, right? 178%. But what happened to India and Japan? India's stock market have gone up 200%, but now it's only up by 82% because their currency was performing poorly against the dollar. The same thing happened to all the other major countries. Japan, Korea, Canada, still plus, but the value itself decreased. Next slide. But the dollar is also changing, right? The amount of dollar in the market is significantly increasing, right? It's up by 182% for the last 2 decades. Next slide. We take that into consideration, then the major stock markets around the globe is rather minus, rather than up by 200% or something like that. US is negative 1%, India minus 42%, Japan minus 44%, right? This is the same chart you saw with the M2 adjustment, which means it's taking consideration the amount of money that's newly printed out by the central banks. Next slide. The red line is Bitcoin. The same chart you just saw with the Bitcoin included. So Bitcoin's price against the US dollar have gone up 111,000%, right? Let's look at the next chart. Bitcoin is a scarce asset, and because of its scarcity, its price can only go up whenever the amount of US dollar is like letting loose. So Bitcoin, about 90% of supply is already in the market, and the rest 10% will be produced in the next 100 years. We all know about it, right? And we have trust that this kind of monetary policy of Bitcoin network will never change. This is the only asset that we can trust that the value of the asset will not diminish because of some central government's poor decision. Next slide. And the long-term holders of Bitcoin is also increasing. Whenever there is a price downturn, the holders that are holding Bitcoin for over 1 year is increasing and setting up the new price bottom. So in 2014, there was a market downturn, and The long-term holders were there. 2013, the new bottom price have gone up from the last one. And now, 2022, the long-term holders are setting up the new bottom price. So whenever there is a bull run coming up next year or 2 years later, this price will become the new low price. Next slide. And the demand of Bitcoin network is also increasing regardless of the price. Bitcoin price is now down 70 or 80% from the all-time high last year, right? But their network fee, it's fluctuating, but it's still increasing. It was 1.1 level last month, but now it's 1.68. So people using Bitcoin network for daily usage is still increasing regardless of the price fluctuation. Next slide. Okay, last thing that I want to say. This is the Amazon stock price chart back in 2009. It's up by 69% at that time because they beat the earnings for the first time. And many people were skeptical the stock price can go up again. But what happened? Next chart. After 12 years, the price is now up by 3,000%. And you cannot even see or realize the 69% of increase which happened in 2009. It's over here. You cannot even realize the uptick, right? It's now 3,000% plus. Next slide. If you see, when you think about this, if you see the Bitcoin's price chart, you never know if Bitcoin is still expensive, right? We never know what's going to look like after 10 years. It might look the same as the Amazon stock price chart, or it will look completely different. You never know. But I still believe Bitcoin is the scarce asset, most valuable digital asset, and cryptocurrency. So hope it'll look the same way as the Amazon stock price. Next one. That's it. Thank you so much.